Money FM 89.3. Best of breakfast. Companies to watch.
Alrighty, welcome to Companies to Watch. And in the hot seat, as always, is Dan Coe. Good morning.
Good morning, Emaad. How's Wednesday looking for you?
Not too bad, not too bad. Feeling okay, just 2 days away from the weekend, so...
Yeah, the countdown is always there, right?
Yes,
but yeah, I'm crawling to the weekend as well. But welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks as well as hidden gems or warning signs to steer clear of. 8855-0893. Text us and tell us whether you think it's going to be a hot or not. Very nice. Okay, Emaad, we're turning to a huge insurer here in Asia, or in Singapore, should I say.
Yes.
No, I'm not talking about your big few like your AIA, Prudential, or what's another insurer name?
FWD,
Yeah.
Chubb,
Nope, none of that.
Manulife.
Yeah. Oh, that's a good one. I see you're pretty insured yourself.
I'm fairly insured. I'd like to think I've got myself covered on a few fronts.
Pretty comprehensive?
Yeah, I guess, you could always do more for yourself, but
Yeah.
given the current circumstances and my age, I think I'm okay.
That's nice. Yeah. Of course, it depends on which stage of life you're in. But for the stage of life that Great Eastern is in, it seems like it's in a pretty sticky situation. That's the company that we're talking about today after OCBC announced that it is making a conditional exit offer of 900 million Singapore dollars at $30.15 per share to Great Eastern Holdings' remaining shareholders. That's a huge story that's making headlines, Emaad. So what better time than now to dive into the latest update?
Yeah, so tell us what's been happening. Yeah?
All right, so here's what's happening, all right? The offer comes more than a year after OCBC first made a privatization bid for Great Eastern through a voluntary unconditional general offer at $25.60 per share. Now, the latest offer, which OCBC said was made at the request of Great Eastern, was deemed fair and reasonable by EY, the independent financial advisor. But before I get into the details, let's talk a little bit more about the background and how we got to where we are today.
Sure.
So, last May, OCBC made a voluntary unconditional general offer of $25.60 per share or $1.4 billion for the remaining 11.56% stake in Great Eastern Holdings that it didn't already own with the aim of delisting the insurer. Now, the listing of the insurer comes on the backdrop of OCBC's hope to resolve the suspension and provide an exit route for minority shareholders who have not already been able to trade their shares for nearly a year. So as you can see, liquidity is an issue here. About 11.56% of the shareholders are just stuck with pretty much investments that they can't liquidate, right? So when the offer was closed in July of 2024, the bank held about 93.52% of the insurer, leaving 6.48% in the hands of minorities. So they did get back a bit of it.
Okay.
But still, the minorities held quite a fair bit of it, and this fell short of the shareholding it needed. That's 96.94% to delist GEH, or to at least compulsorily acquire the rest of the shares.
Got it.
So, trading in GEH shares was thereafter suspended on July 15, 2024, after the insurer's free float fell below 10%. So, can you see that it's a really sticky situation? Because on one hand, OCBC wants to acquire all of it, just so he could delist, but it fell short of it, so he couldn't really do anything. But on the other hand, the minority stakeholders who are currently holding onto the shares can't trade it because it doesn't meet the 10% minimum requirement. So fast forward to today, OCBC announced that it is making a conditional exit offer on June 6th, that was last Friday, of $900 million at $30.15 to support GEH's delisting proposal, as well as to meet listing requirements. And the conditional exit offer is basically a proposal made to shareholders, usually in the context of a voluntary delisting or corporate restructuring, to sell their shares only if certain conditions are met.
Got it.
So at least 75% of the total number of issued shares must be in favor of delisting resolution at an extraordinary general meeting that's to be convened soon. And OCBC will not be able to step in. So here's the thing. Of the minorities, right, there are two large shareholder blocks within the remaining 6.28% of GEH that OCBC does not own. We're talking about the Wong and the Lee family that holds close to 3% of GEH. That means if both parties do not support the delisting, there is no way that the delisting vote can succeed. And if the delisting resolution fails, shareholders will then have to proceed to vote on a resolution to satisfy the free float requirement, which is 10%, right?
Yes.
So the requirement states that the public must hold at least 10% for the company to remain listed. And if GEH resumes trading, analysts have said the liquidity and trading volume of GEH shares are unlikely to improve given the more concentrated shareholding structure of the insurer now. So given the current macroeconomic uncertainties as well as the volatility, it also makes it unlikely that the share price can rise as much.
Yep, that's correct.
So let's talk about what some of these anonymous shareholders are feeling at the moment.
Okay.
So based on an anonymous shareholder, the latest exit offer is not good enough. We're talking about the $30.15.
Yes.
Because it's at the lower range of the $30 to $36 possibility, but it is still higher than before, which was proposed at $25.60. So some of them do agree that, this might be a better exit offer. But to many of the other shareholders out there, majority are saying that these actions that OCBC has conducted are disproportionately disadvantaged to vulnerable minority investors, particularly those unable to hold suspended shares. So right now, the fate of Great Eastern ultimately lies in the hands of Lee and the Wong family.
Wow, what a story, Dan. So much to cover there.
Yeah. Were you able to follow them through? I know it's quite
to
wordy,
some degree,
right?
yes.
Yeah. It's a little bit complicated,
Yes,
but
it
all
is.
I can say is that, it just does remain quite uncertain for Great Eastern Holdings. As of now, they're still not currently trading in the Singapore Exchange because they do not meet the 10% requirement that's required by the SGX. So, yeah, we'll just see whether this pulls through for them. But verdict for me, I'm probably going to go with a not.
Yeah, I think given, the complexity of the situation, I don't know what the resolution is going to be come the EGM, but yeah, looks like a not for me as well.
Yeah, it's a tough one to crack for this one, Emaad. Yeah, but anyways, that's pretty much all we have for our stock in focus, Great Eastern Holdings. It was founded back in 1908 and it is currently the most established life insurance group in Singapore and Malaysia, with over $100 billion in assets and more than 16.5 million policy holders.
That's a lot of policyholders.
A lot of them. So what do you call someone who stays with his or her ex because of shared insurance?
It's too early.
Friends with benefits.
Very good. Very good.
One more. Did you check your home insurance policy?
I did.
Did you know that apparently if your blanket is stolen in the middle of the night, you're not covered?
That's a good one.
Yeah. And that's all we have for Great Eastern.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.